Alright guys, welcome back to my channel. I want to appreciate everyone there for your comments and your likes and for sharing my video, most especially the last video I did on levels. I say a very big thank you to you, and I will still be indulging or begging you to please keep sharing this channel and keep subscribing to the channel. They encourage the people you share with to like and subscribe, and as well at the same time they should also share with their friends, as this is the only way you can be helping me back. Remember, I'm giving out this value for free without demanding anything from you. So the only way you can help me back is to like, comment and subscribe to my channel, and also share with your friends too, and you endorse them to do the same thing well, as that's the only way you can be helping me back. So today, without wasting much of your time, I want to be sharing a strategy you can use to catch spike on broom and cash. And as well, as one thing about the strategy is that it's really give you an edge to trade on both way. You can use it to scalp to catch spikes on boom and crash. At the same way, you can use it to trade in the reversal pattern. You understand? It is a two-way sword, two-edged sword. So without wasting much of our time, I would be sharing this setup with you. Once again, please remember to hit the subscribe button and make sure you turn on the notification bell, so that the next time I'll be uploading videos, you'll be the one to get it, and so you stay updated. So without wasting much of our time, I'll be going to the setting of the indicators. So we'll be using the two indicators here. This is the first indicator window, and what's the other one. So the first indicator we're using is our moving average 13, and the setting is this: moving average 13, period 13, method exponential applied to close. The style, you can use any style of your choice. And then the next moving average we'll be using our moving average 50, with period 50, method is exponential applied to close. You can use any style of your choice. Now the next indicator we would be using, which is our indicator window, is our RSI. The period is going to be 1, applied to close. The pixel is 2, and you have the levels, the 50 levels, the 10 level, the 90 level, 80 and 20 levels. You can use any style of your choice, right? Then on the RSI, the style on the RSI has to be the color of your background. If you look at very well, my background is what? My background is white. So that's why I'm making it white. Understand? That's why I'm making it white. So the next indicator we'll be using is this, our envelope. The period is going to be 50. The shift is 0. Deviation is 0.618. Method is simple. Apply to what? Apply to close. So the upper band is going to be 2 pixel, and the color is going to be red, while the lower band is going to be 2 pixel, the color is going to be green. There's no levels there. Once you are done, you click on done. Right, once you are done, you click on done. Then the last indicator we'll be using is our the last indicator we'll be using is our what? Is our moving average also. The period is going to be 7, shift is going to be 0, method is going to be exponential, apply to close. While the style is going to be, you can use any style of your choice. So without wasting much of your time, let me explain how this strategy works. So the way this strategy works is that, you see, this is your envelope. The envelope we are using, we'll be using this indicator circle here, right, for confirmation, right? And we also consider our what? Our main indicator window. So this is the what? This is the red envelope, which is our upper band, as we are doing the same thing, and this is the green. This is our lower band. So the way the indicator works is this. This is how you use it to look out for your setups. You can use any time frame of your choice, right from 1 minute time frame down to daily time frame as you prescribe it. But the only thing there is that the shorter the time frame you use, the shorter profit you make. As in, it defines the kind of trader you are. So if you are using a 1 minute time frame, you won't be able to take much. And if compared to when you are using a 5 minute time frame, you understand? So it all boils down to the time frame you want to use, right? But I would recommend you use 1 minute time frame for your scalping. As in, if you want to trade spike, just to scalp like 10, 15, 20 pips, use the 1 minute time frame, and the 5 minute time frame to take more, like 30 to 50 pips or more upward. You can use your 5 minute time frame. So without wasting much of your time, this is how the indicator works. Mm, this is how the indicator works. I'll be using both 1 minute and 5 minute time frame just to backtest it for you, to as the word to explain the strategy for you. So the way the indicator works is this. See, this is your upper band. Let me start with boom now. Look at, this is your upper band. Anytime this is your moving average on your indicator level, this moving average on your indicator level, let me, okay, this moving average, right? This moving average on your indicator level, this black moving average, anytime is at this, what, if you are on boom, whether boom 1000 or boom 500, you wait for it to reach this 10 level. Though you can start anticipating for your what, looking for your buy entry, for your buy, for your spike from 20 level, but a refined one would be, sorry, so a refined one would be your what, would be your turn level, would be your 10 level. Let this moving average 7 on your indicator window to be at this 10 level, right? Before you place, you start looking for, well, before you place your buy, to start looking for your spike. And most likely, most of the time, that is the first confirmation you look at for. The second form of confirmation you'll be looking at for is this your green lower band envelope should also be at this 10 level too. It should be at this 10 level. It should be at this 10 level. So anytime it is at this 10 level, these two confirmations, this is confirmation you look for on your what, on your indicator window, right? The black moving average has to be at the 10 level together with your envelope. They also have to be what, your green lower band, your green lower band or envelope has to be at the what, at the 10 level. It has to be at the 10 level. So anytime it at this 10 level, you can start to place your what, to place your buy. They can cross, right? They can cross. But once the two is at 10 level, right, you place your buy. So the confirmation you'll be looking for on your, this is the confirmation you look for on your, that's the confirmation you look for on your indicator window. Now to your main indicator window, which would refine your what, your entry for you, as in it will refine your entry for you. So you look out for the what, the crossing of these two moving average, the 50 moving average and the 13 moving average, to what, to confirm your entry, as it's going to give you more confirmation, right? It's going to give you more confirmation. A practical example of it is this. Look at, you have your what, your, looking at this now, your moving average on the indicator window is around, what is already on your, on your 10 level, right? Together with your envelope, right? You can see it spike, right? But it spike, so you can start placing your trade the moment this moving average, right, is at what, at your 10 level. You start placing your what, placing your trade to, for a buy. You look for your spike here. So it this spike, you can see it this spike, and we have this. Then now there was a retracement back. You now have your 50 200 cross, your, sorry, your 10, your 13 moving average and your 15 moving average now cross together here, right? your envelope is still at your what? Look at your envelope is still at this level here, at this 10 level here. So that was why you have this. Look at it. That was why you have this 1350 cross. So you can what? Place another buy here, and you have it like this. So normally you can wait till your moving average you reach your 80 level or your 90 level before you take it, as the case may be. But to be at the more safer side, I would advise you just take like 30 pips to 50 pips, right? Take 30 pips to 50 pips, right? You have the two moving average crossing here. Your envelope is still at your what? At your 10 level. Your envelope is still at your 10 level. You can see it here. Your envelope is still at your 10 level. Look at it. It's still at your 10 level, right? It's still at your 10 level. So that was why you can what? Enter for a long time like this. And you have 30 what? You take 25 to 50 pips as the case may be. You can see you even have more than that, right? You have more than that. You have 50 pips already, right? This is on 5 minute time frame. If you're on 1 minute time frame, it's going to be a little bit much congested. So you can use that is what you consider to look forward for your buy. Let me go on 1 minute time frame and still show you. The same thing is applicable on your 1 minute time frame. You can see your envelope is your moving average is at your 10 level. You have this spike, right? You have this spike. You have this spike. Now you have your 1350 cross again, right? Your envelope is still at your 10 level. Look at it, it's still at your 10 level. So that was why you can take this buy. And once you take this buy, you look at what you can take your 25 to 50 pips as the case may be. That is after 37 pips here. You have a 37 pips here. So that is what you consider for. And now the beautiful part of it is that the same thing that is applicable, right? You can also take your what? The reversal pattern of this. So that's why I told you it's a two-edged sword. You can use it to what? To trade spike, and you can use it to trade what? The reversal on boom and crash. Look at now. You consider the same thing on your what? You wait for your upper band Bollinger Band, upper band envelope to be at this 80 level or 90 level, preferably the 90 level. Then you what? The moving average has to be at that level too. Look at it, has to be at that level. It has to be at that level, and you can what? You can conveniently trade your what? You can conveniently trade. You can see it's still running, right? You can conveniently trade it and till your RSI, your till your moving average get to your 50 level or your what, or your 20 level, or you have your upper Bollinger Band coming down to the 50 level or 200 or 20 level. Do you understand? So that is what you consider for on buy. Now to this is for boom. So on crash, you can use it on any time frame, but I would advise you just stick to 1 minute and 5 minute time frame. If you are going on 15 minute time frame, that means you are extending it. You are no more scalping again. You understand? You are no more scalping again. You are actually going for a long time, and you can take more than 50 pips. You can take more than 25 to 50 pips as the case may be. Right. So let me explain it on crash too. We consider the same thing on crash too. Look at your crash now. Look at your crash now. Look at it now. So on crash now, what you'll be considering if you are taking the spike now is that you wait for this moving average, right, to get to your 80 level to 90 level. Probably it has to be at your 90 level, right? And this your upper band on your envelope has to be at your what? At your 90 level too. Look at, you have it at this 90 level. The next thing you have is this spike, right? Is this spike, and you wait till, like I was telling you, wait till this. Look at your moving average now is at your 10 level already. It's getting to your 10 level already, and what, your moving average is already at the 10 level here. So that was why you have this spike here. And you can see if you measure this spike now, if you enter here, since it touches it here, your entry will have been like here, right? You have like two candlesticks, and you can what, take your conveniently 25 to 50 pips. You can see you have your 27 pips already, though it's still going to spike more, right? It's still going to spike more, but this is on 1 minute time frame. The same thing goes to it on 5 minute time frame. You can even see it now on the same thing. You have it, what, you have your envelope here at this 90 level, right? and the what and the moving average is also at 90 level. So you have this spike here. And if you are using it for the reversal, if you are using it for the reversal, the same thing is still applicable to it. The same thing is still applicable to it. You can see it here. You have your moving average at your 10 level together with your envelope at your 10 level, and you can see the way it goes out. It goes out here. It goes out here. You can what? It goes out. So that is how you consider it. So for your entry, you have two entry to consider. Entry confirmation. The first one is that you have to have your 1350 cross, right? If you are not getting your 1350 cross, then you wait for price to close above for crash 500. Now it has to close. If you are taking it for a sell, right? If you are taking for buy, now it has to close above your 13 moving average like this. It has to close above. So your entry will have been after this candle here. It will have been this next candle here, right? Since you are not getting your 1350 cross, right? But your RSI, your moving average, and your envelope is already at your 10 level. You can see it is already at your 10 level already. So you just wait for price to close below above 13. That means we want to take the reversal pattern of it. If you want to take the reversal pattern of it, right? So the same thing goes to your what? The same thing goes to you too on your sell. If you are looking for a sell, right? If you are looking for a sell, once you have it at this area here, you can always wait for price to close below 13. If it's closing below 13 before you take this trade, your entry will have been after this long spike here, right? After this long spike here, and it's still at that region already. It's still at that region. Look at it. Your moving average and your envelope is still at the 890 level. You understand? And they are still crossing down, right? They are still crossing down, right? They are still crossing down. If you look at now, if you have taken your entry, okay, you wait for price to close. The spike should close below the 13 moving average because you can't get 1350 cross, right? Your entry will have been on this candle here, and from there you can have gathered like more than 50 pips ESF, right? More than 50 pips here. Because look at it, you have 51 pips already down to this area. And by the time you have 51 pips already, it was already on your what? Closing down already. So guys, remember to hit the subscribe button and what? And subscribe to this channel, and also let me know any problem or difficulty you encounter while backtesting. I will indulge you to backtest this thing very, very well before you go on your live account. Right before you go on your live account, as the way of giving back and a confirmation, I will be giving another strategy you can use for accurate spike catching on boom and crash, but I will only be uploading that strategy by the time we are close to 100 subscribers. So once we hit the 100 subscribers, I will definitely upload another strategy you can what use to catch spike that is more accurate, like 99.9% accuracy spike catching strategy. But before I will be uploading that, you have to share this video and share the channel. We have to hit the 100 subscribers. Once we hit the 100 subscribers, I promise I will drop in another perfect strategy that you can use to trade the boom and crash. Also, so guys, remember to hit the subscribe button, like and comment on the video, and as well you share to your friends. I still remain your humble self, trade with Modupe, making trading to be fun. As a matter of fact, trading has to just be fun. So until the next time, you'll be seeing me again. Chill.
Hello guys, I welcome you back to this wonderful presentation. This unbeatable strategy on boom 1000 and boom 500 with boom 300. This is an unbeatable strategy, an updated version of one of my major and most profitable strategy you ever find in my channel, the envelope strategy. Guys, this strategy is very powerful, that it works amazingly, very profitable, that You guys could actually watch the first video and see how it has done, and you could see now the feedback from people. Now I'm giving the updated version of it. Right, this is the real strategy you will find on YouTube to trade boom 1000, boom 500, and boom 300. It is an unbeatable strategy. This strategy, I should sell it, but I'm giving out for free. What I'm asking you guys to do in return back is just for you to like this video, subscribe to my YouTube channel, and share with your friends. Last year, I made this first version of this envelope strategy, and you can actually watch the first version of it, because this is an updated version of it. But I promise you guys, it's going to be really amazing and mind-blowing. Right, this is the most effective strategy you ever find on YouTube on how you can trade boom 1000, boom 500, and boom 300. This strategy is unbeatable. If you really want to be profitable with boom trading boom, then watch this video to the end. Don't skip any part of it. As you skip, you might be missing out a very crucial information about it. Do well to hit on the subscribe button and subscribe to my YouTube channel. Turn on the bell notification and also share with your friends. Please do well to comment on the comment section. Let me know whatever you want me to talk about in my next video. So guys, I don't want to waste your time. So this is an envelope strategy. It is the most effective strategy you ever find on YouTube. Right, it is different from every strategy you'll be seeing on YouTube, as it is very powerful. And one thing about it is that the accuracy of this strategy could not be overemphasized, as in it is very accurate. You are going to be profitable with it. Just make sure you follow the rules, right? Follow the rules, and it's one of the simplest unintended strategy. When it comes to indicator, there are indicators that repaint, indicators that fade. So the reason why I always tell you that whatever indicator you are using, whatever strategy you are using, understand the pros and cons of this indicator or strategy, as it is what is going to give you that real profitability that you want in trading. Guys, so this envelope strategy, guys, this envelope strategy is very powerful, very powerful, as in mind-blowing. So I'm going to be doing two versions of it. The first one is on how you can use it to trade spike in boom and crash, in boom 500, boom 1000, and boom 300. Then the second part of it is going to be how you can actually use it to trade the ticks in boom 1000, boom 500, and boom 300. Do well to watch the video to the end, as you might be missing a very crucial and important important information about the video, about the strategy, guys. Now, without wasting much of your time, the strategy, I'll start with the time frame. As for the time frame, the strategy works best on every time frame. But from best, there will always be best of best. Now, the best of best there is now that it depends on the kind of trader that you are, the styles of trader that you are. If you are a scalper, I repeat, this information I'm about to give is very crucial. Rewind back and understand what I'm saying now. If you are a scalper, then you should use your 1 minute time frame and 5 minute time frame maximally. Right, if you are a scalper, and what we mean by a scalper is that, so if you know you are not going to be spending more than 1 to 20 minutes in the market, then you should use your 1 minute. You should use this strategy on your 1 minute time frame and 5 minute time frame. But if you are an intraday trader,
that okay, you can spend like 2-3 hours in the market, then you can use your 5-minute time frame and 15-minute time frame, then maximally your 30-minute time frame. I repeat, know the kind of trader that you are, know the styles of traders that you have. So if you are an intraday trader, use 5 minutes, 15 minutes and 30-minute time frame maximally for this strategy. Any other thing from this, you accuracy you want, you will not get it. The profitability that you want, you will not get it. So make sure you rewind the video back and understand the kind of traders, in line with the time you want to spend in the market, and choose the best time frame for you. Right. Then if you are a swing trader, then you can start thinking of using this strategy from 1 hour time frame upwards to your 4 hours time frame, and maximally your daily time frame. Right. So one thing that is different now is that now, as an intraday trader, as a scalper now, you are spending between 1 to 20 minutes in the market. So 1 minute and 5 minutes. But as an intraday trader now, that means you can have like 2 to 3 hours. That's why I said you should use your 5-minute time frame to your 30-minute time frame maximum. Then for a swing trader now, that means you're actually holding for like 8 hours, 4 hours. Then your 1 hour time frame would be very, very okay for you. So, and one thing about this thing is that now, whichever time frame that you choose based on your styles of trading now determines how fast you make money with this strategy. So if you really want to make a quick money, very fast money, that you needed your daily 10k, your daily $10 daily target, your daily $20 daily target, urgent 2000s, as we always call it here, urgent 2k, then you can use your 1 minute time frame and 5-minute time frame, guys. This strategy is very, very powerful. You can actually watch the replay of the first version. Look at the massive comment, the massive feedback this strategy has actually done to people, has changed their ways of trading. They've changed their profitability. Honestly speaking, you need to watch the first video on this envelope strategy. It is a very profitable and unbeatable strategy that you can ever find on YouTube. Now guys, don't let me waste your time. That is for the time frame. Then as for the indicators we are going to be using, we are going to be using 2 indicators, 2 moving average on our main indicator, and 2 or 3 other indicator on our indicator window. Let me put you through how you are going to set the strategy. Right, I don't want the video to be too long. So the first indicator we're going to be using is that, for those of you that are actually new on this, right, you can actually click on this F here, right? So once you click on this F, right, you click on this F plus here, this icon here, right? So once you click on it, then you look for your you start for your moving average, right? So this is our moving average, right? So the first moving average we are going to be using is the period is 13, shift is 0, method is exponential, apply to close. I repeat, the method is exponential and the period is 13. This is very, very crucial. This is one of the pros and cons of the strategy, so pay attention to it, right? So the star is 2 pixels. Then the color, you can use any color of your choice, but if you want your chart to look like mine, so that when you are doing your back test, you will not get confused, you will not get lost, then make it red. Then once you are done, you click on done. And so you go back to your F plus again, you click on this F again, then you click on this F plus, and then you look at for your moving average. So the second moving average you are going to be using is the period is 50, shift is 0, method is exponential. Take note, the period is 50 for the second moving average, the method is exponential, apply to close. Then the style is 2 pixels, then the color is black. Once you are done, you click on done.
right? So the second moving average you are going to be using now is this. You click on this F plus now click on this F plus now, right? You click on this F plus here, right? You click on this F plus here. So once you are down, then you now look for your what, the first indicator you had. The first indicator you are going to be adding is going to be your RSI, right? Let me even delete this because this is the major thing here. This is the major thing. Let me delete. So once you click on this F plus here, right? You click on this F plus here, right? So you click on it, then you look for your relative strength index, right? Now the period is 1, applied to close, the style is 1 pixel. Then the color, now this is very important, guys. This is very important. Now so for the color, now the color has to be the color of your background. My background is white. If your background is black, make it black, because we are not using the RSI signal line. We are not using the RSI signal. We only need the levels from the RSI, right? We only need the levels from the RSI. So that is why we are making it the RSI signal line invisible by making the color of our background. So make it white. And the pixel is 1 pixel. The pixel is 1 pixel, right? So for the levels now, right, you click on this. So we have the 80 level, the 90 level, the 50 level, the 20 level, and the 10 level. Once you are done, you click on what? You click on done. You can see I have it on my chart. So you click on this F plus again. Now you are not using this F plus here at this main chart. You are using this F plus here at this indicator window 1. Take note, guys. Take note. You are using this F plus here. So you click on what? Click on this F plus here, right? You click on this F plus here. Then you now look out for your what? For our envelope, right? You look out for our envelope. All right, you look out for our envelope strategy. Envelope. Wow. You look out for our envelope. Man, can't find the envelope. Are you kidding? Okay. See, here is our envelope. So the period is 50, shift is 0, then the deviation is 0.618. Now let me give you the pros and cons of this envelope strategy, as it is one of the major confirmation we are going to be getting from it. Now if you look at this deviation, for those of you that are very conversant with my channel and Fibonacci, you look at that, this deviation that we have here is what? Is 0.618. Is one of the levels that we have in our Fibonacci level, and is one of the what is our 62% OTE, optimal trade entry point. So this is the pros and cons of this envelope strategy. We are actually taking the pros and cons of this. Now we're actually taking the effect of our Fibonacci, but we are using it in another dimension. This is one of the reasons why this strategy is very accurate and powerful, that you can't find such on YouTube. You can't find such. It's one of the best you ever find. So because we're actually implementing our Fibonacci is very powerful tools. One of these days I'm going to make a video on it. If you actually need the videos on Fibonacci, drop in the comment section that you want me to upload the Fibonacci, and I'm going to do the pros and cons of Fibonacci. You can trade with your Fibonacci alone. It is stand-alone indicator that is another powerful, profitable indicator you can use to trade in the financial market. You can use it to make your boom and crash. So if you need the strategy, comment in the comment section that you need it, and I'm going to do justice. So once I get to like hundreds comment on it, I'm going to make the videos, and you guys would definitely give out your feedback on, cause the strategy, the video on that Fibonacci is going to be mind-blowing and very accurate. So guys, so the method is simple: apply to close, upper band is going to be 2 pixel, lower band is going to be 2 pixel. Then for the upper band now, the color is going to be red, right? Because we'll sell at the red. That is the what. Then the lower band, the color is going to be black, because we actually buy in the what, in the lower band. So once you are done, you click on what? You click on done, right? You click on done. Right, so the final moving average, the final indicator we are going to be adding is our what? Is our moving average. So you click on this F plus again. Then now don't forget we are still using indicator window 1. So you click on this F plus here. Then you click on moving average. So the period is 7, shift is 0, method is exponential, apply to close. Then the style now, the style is what? 2 pixel. Then the color is black. So once you are done, you click on done. As I don't want the video to be too long, so you click on done. So now the confirmation we'll look out for, right? The confirmation we'll look out for now is this. There are two confirmation we'll look out for. So the first confirmation, right? The first confirmation is this. So the first confirmation we'll look out for, right, is on our what? The first confirmation we'll look out for is on our indicator window, right? Is on our indicator window. This is our main chart here, right? So the first confirmation we are going to be looking at for on our what? On our chart is coming from our what? Our main chart, and it is no other than what? You have to wait for this moving average. Right, these two moving average now has to cross. These two moving average has to cross. No, okay. Now one thing I forgot. Now for the wow, you can see now for the zoom level. Now the zoom level is zoom level 2, normal zoom level that we'll always be using. Right, normal zoom level that we'll always be using. Right, normal zoom level that I've always been using. Right, so that is the what? Okay, so that is the what? The zoom level now. So now the first confirmation we are going to be looking out for, right, guys, on our main indicator is that you have to wait for these two moving average to cross each other. They have to cross each other, right? They need to cross each other. It's very, very important. Right, they need to cross each other. Now remember I told you can use any time frame, but now I'm going to be working with what? The 5-minute time frame, because I actually want you to make a very profitable one, right? Stay long in the market as a scalper. 1 to 5 minute time frame is what you work with. So I'm using the 5-minute time frame here for the purpose of this video. So you wait for what? The two moving average on this our indicator level to form, on this our main chart to cross. So once it cross, right? Once it cross, so once it cross, yes, we'll have the crossover here, right? That is the first confirmation. Now, let me give you another pros and cons of this strategy. Now, if you observe, we are using two moving average. The first one is our 13 moving average. The second one is our 15 moving average. 13 moving average exponential. 13 exponential moving average is the what? Is a trend leading indicator. It's a trend leading indicator that will give you the direction of your what? Of the trend. That's why I'm telling you, this strategy is very powerful, because the indicator, the parameter there are really pure price action parameters, right? So 13 moving average is the dynamic support and resistance indicator that shows you the trend in the market. So that is why we are using it. And the 50 moving average now, for those of you that are very conversant with institutional tradings, with price action, right, with BTMN, with ICT, these are the indicators that we use. The moving average that will tell us the direction of the trend. So as a matter of fact, if you understand this strategy very well, you don't need to start deceiving yourself that am I in a downtrend, am I in an uptrend. Just understand these pros and cons of this strategy and you are good to go. So 13 moving average is the what? Is a trend directional moving average that shows the direction in the market. 50 also shows you the what? The direction in the market. Right? 50 shows you the direction in the market, and that is why I'm telling you that now the 50 now, the period is 50. Now let me give you the pros and cons of it. Now the 30 moving average is the short time trend. We'll give you the short time, and now that means we're going to give you the what, the short trend, the trend in the 1 minute time frame, right? While the 50 will be giving the trend in 5 minute time frame. You understand my point? So that is the pros and cons of this strategy. So once you get the two confirmation crossing together, now they will take the average of it, and that will give you the what, the uptrend that we'll have. So you can see we'll have the crossover here, right? We'll have the crossover here now. So that is the first confirmation, right? So the second confirmation now is that now you go down to this our second indicator window here, right? Our indicator window 1 now and our envelope now. So on the second part of it now, you see this our green moving average here, right? This our black moving average, which is moving average 7. Exponential moving average 7, right? So our exponential moving average 7 right? Our exponential moving average, I'm sorry guys, our exponential moving average 7, right? It has to be at this 20 level, preferably 20 level, but for accuracy purpose it has to be at our 10 level, right? Our 10 level. Remember this normal trend that will buy at what, will buy at a lower price and will sell at what, at a higher price. So the lower price, it has to be at the what, at the 10 level, right? It has to be at the 10 level. Now once it's at the 10 level, now the second thing now is that you see this our envelope. Now this is the green envelope, this is the what, the red envelope, this is the lower band of the envelope, and this is the upper band of the envelope. So since we're actually using it for what, for a spike, to catch spike, then it has to be this envelope. Now this lower part has to be at our 10 level for an accurate and effective spike trading, right? But for conservative, right? But for an aggressive trader now, you can actually take it once it's at 20 level. But for a conservative trader now, it has to be at the what, at the 10 level, right? It has to be at the 10 level. So that is it. So once you have it now, then this our moving average 7 now has to cross our what, our lower band of the envelope, which is our what, our green moving average here, right? And it has to be at what, at 10 level. So once you have this, you can take your entry and you can take up to what, 10 to 50 pips. Guys, you don't need to be afraid. You will have it 50 pips, and using the right standard, the right lot, using the right lot is a very big money. It's a very big money. So just follow the story. Look at now, we have this crossover, and then we have the crossover here, right? Where we've seen the what, we've seen the moving average at our what, at our 10 level. All criteria are met here, so you can take your entry from here, right guys? You can see this is even more than 50. See, this is 145 pips, this is 145 pips. You can see this is 145 pips. We have 77, so our 50 pips is here, right? Our 50 pips is here, right? These are 50 pips. So this is one of the major things I'm telling you, that for effective, you actually want to make a serious money, because one thing with BOM 1000 is that the spike in BOM 1000 are very numerous, and it can give a very profitable one. So your entry, you have like 161 pips, 161 pips, 161 pips, and you are good to go. Imagine taking 161 pips with 10 standard lot or one standard lot. You are good to go. One standard lot, that's 1 times 161, that's $160. Using 0.5 times 160, that is $80. $80 in my country, in Nigeria, is very big money. That in fact, that is like some people's 2 months salary, and you are making it within a short period of time, within 1 day, within 2-3 hours, you are done. So guys, do well to backtest very well. Do well to backtest very well. It works perfectly. It works perfectly, guys. It works perfectly. I don't want the video to be too long. I don't want the video to be too long. I'm actually going to drop in the second version of of the strategy. This is another word. See, guys, see, this is another word. This is another. See another confirmation. One we word. All you just need to do is just for you to wait for what? Wait for your confirmation. Guys, wait for the confirmation. You can see. I see, we have the confirmation here. You are good to go. You are good to go. All you need to do is just for you to wait for the confirmation. See, we have the confirmation here, and your what? If you enter here now, you can see you can take your what? This is 59 pips already, and this is 75 pips. So this strategy is very very powerful and accurate. All you need to do is just for you to wait for your what? Wait for your setup. All you need to do is just for you to wait for your setup. See, this is another one here. This is another one here. This is another one here. See guys, see, you can see. So guys, do well to what? To back test. See, this is another one. We will have the crossover here. All criteria are met here. Right, and our what? And our main charts we have this. We have this, guys. See, now let's measure. This is 100 pips. Over 100, this is 110 pips. So this, if you really want to make serious money, I would advise you stick towards boom 1000. Boom 1000 will give you a very profitable course. If you're able to wait patiently for the what, for the rules to form out, you are taking nothing less than 50 pips from the market. Using the right standard lot, you are good to go. You are good to go. Apply risk management and do make sure you do your back test very well. Do your back test very well, guys. Stop. If you are yet to subscribe to my YouTube channel, please do well to subscribe to my YouTube channel and turn on the bell notification so that anytime I'm dropping a new comment, you guys will stay updated. You'll be the first one to get it. And meanwhile, you can also join my Telegram channel. Join my Telegram channel so that for you to get what profitable tips and what some signals anytime I feel like sending what signals. So guys, do well to comment in the comment section whatever you want me to be talking about. And don't forget, if you actually want me to make a video on Fibonacci, how you can use it, drop in the comment section that you need the Fibonacci video. Once we get 100 comments on Fibonacci, I'm going to be dropping the video on it. So guys, see you once again. Let's keep making the reef. Welcome guys back to my channel. I say very big thank you to you all. Last week I actually dropped a strategy, an unbeatable envelope strategy that we can use to trade crash 1000, crash 500 and crash 300. And I did appreciate you guys. I've seen you guys comment that I actually need a deep dive on how we can use the strategy. Now I'm making the version 2 of this video on how you can use the strategy effectively, and you will be profitable. As a matter of fact, if you want to make $200, $300, even $400 daily trading crash 1000, crash 500 and crash 300, then this video is for you. I'm going to be doing a very deep dive on how you can use this unbeatable envelope strategy to make crash 1000, crash 500 and crash 300. I've keep emphasizing on this course. These 3 pairs are very unique and very very dynamic, that they can give you your daily target of $200, $300, even $400 without you stressing yourself. All you need to do is just for you to wait for the setup and pull your trigger. Meanwhile, if you are yet to subscribe to my YouTube channel, hit on that subscribe button and turn on the bell notification so that you still updated each time I'm dropping a new comment on the video. As on the version 1 of the video, I've done the settings. I've given out the settings on how you can use it. Now I'm only going to be explaining how you can use it and how you can set up your chart to look like mine. I'm going to be giving you a deep dive explanation on how you can use this strategy to set up your trade setup, to look for trade setup, and to buy and sell in crash 1000, crash 300 and crash 500. Stay tuned. So for the benefit of those of you that you actually find the link to the first video where we can watch where you can watch the strategy and set up your chart. I'm not going to be going through that again. I don't want the video to be too long. I don't want you to bore you too much, right? So we've actually set up our strategy, both the main indicator and the indicator window. But for the benefit of those of you that are new, let me just do a very quick dive. On it.
Let me give a deep dive on it. Right, so the first thing we use was I will click on this F plus here. We had our moving average. The first moving average we used was the period was 7, shift to 0. You can actually screenshot so that we won't waste time. Was it just set it up the way it is like this? So once you are done, you click on done, then you click on this F plus again. You click on this F plus again. So you add another moving average. Now the period we are going to be using here now is going to be 10. The period is 10. The method is exponential. So the pixel now you change it to what? To red. Once you are done, you click on done. Then you click on this F plus again. Click on this F here. Then you add our RSI. I'm not going to be explaining why we have this parameter. You can actually watch the first video to understand how we got this parameter and why it's very important to use this parameter. I've done a deep dive on this indicator themselves. Right, so you just click the period is 1, apply to close, star is 1 pixel, right, level is 90, 50, 10, 20. Once you are done, you click on done, right, then you click on this F plus. Then we are using this F plus here. You are using this F plus here, not this one, right, not this one. So you click on F, you click on this, right, then you add our major which is our major indicator, which is our envelope strategy. Our envelope. So the period is 50, the shift is 0, deviation is 6.18, method is simple, apply to close, apply to close. So the upper band is 20, the upper band is 2 pixel, the lower band is 2 pixel, and the color for the upper band is red, the lower band is black or is green. So once you are done, you click on what? You click on done. You see the major indicator we are using here is this our envelope strategy, and this is the major thing that gave us the confirmation that makes this strategy very unique one. You can actually watch the part 1 of this video. I did a very deep dive on how we apply this parameter and how this parameter are very important. So once you are done, because you need to understand, if you don't understand this envelopes indicator, you can't use this strategy effectively. So if you are here to watch that part 1 video, watch that video. I did a deep dive on this envelope strategy and how we got this and how this parameter are being used in the market. Right, this is the reason why majority of you blow account, because you tend not to use an indicator, a strategy, you don't understand the pros and cons of it. Obviously, how do you want to? Trading is very easy and fun, right? But the truth there is that 90% of majority of traders don't actually understand the pros and cons of the strategy or indicator they are using, and you tend not to blow up your account. So that is why majority of you blow up your account, because you don't understand the pros and cons of the strategy you are using. So meanwhile, watch that first video and understand why we get this parameter and how we need to use the parameter. So once you are done, you click on what? You click on done. Right, so the final indicator we're going to be using is what? You click on this F plus here, then moving average. You change this moving average. The period is going to be 7 and not 10. Then the color is black. Once you are done, you click on done. Right, so this is all we need, guys. This is all we need. So the major, we are going to be using 2 confirmation. Right, so we're going to be using confirmation. One is going to be from our main indicator window here. Right, it's going to be from here. Then the major and the most important confirmation is going to be coming from this our indicator window. Our indicator window, that is major confirmation that you need to wait for it to set up. Right, the envelope strategy is a very powerful strategy and unbeatable strategy you ever find as far as what the envelope strategy is concerned. Right, so the confirmation we are waiting for now is this. The confirmation we are waiting for is this now. So you first and foremost, right, you need to wait for what? For a consolidation like this. Once you have this consolidation, then you wait for your moving average, this 7 moving average to be at this 20 level, 10 level, and then it has to be, then this our lower band of our envelope strategy has to be at this level too. It has to be at this 20 level for us to have a buy. It has to be at this. Now look at it currently. Now look at where it's currently now. Look at where it's currently. You can see it's above 20. Look at all the when we have this consolidation. You can see it's above 20. You can see when we have all this consolidation. You
can see is above what is above 20. So the moment you have this consolidation, and this consolidation is just a process of what accumulating contracts. These are the areas when they tend to what they tend to trick you into the market. You open a position when it's not right for it. So the moment you have to wait for this consolidation. We call it consolidation because you don't even have a what, you don't have a trend. You don't have a trend. That's why we call it consolidation. So in the process of the consolidation, they will build up contracts. They will build up contracts. People will buy, move the market or move the market down. There's no perfect direction for the market. So that is why you just need to wait for this consolidation. Once you see this consolidation, then you wait for a massive breakout. You wait for a massive breakout. Now looking at this consolidation, now you can see that this is the range. This is the highest of it, and this is the lowest of it. So you tend to wait for them to break out any of it. If they break it up, then you wait for that means obviously they will give you another sell that will actually will come back. Right, they said that will come back. So once you mark out the consolidation, then you use your you use our rectangle. Look at this is the peak of it. Wow, this is the peak of it. Feel. Let me. So this is the peak of it, right? Okay, let me change to make it more obvious. Now this is the major thing that make this strategy a very unique and powerful one, right? A very unique one. Now on this strategy, now remember that when we're actually setting up our envelope strategy, we make use of a level that we call our 61.1 rev, right? 0.618, right? 0.618, which was our Fibonacci level. Right? So once you are done, you click on done. Now look at this. Now let me now tell you, this is the unique part of this strategy. Right, the confirmation you are going to be getting is this now. So let's use our Fibonacci. Remember that on the first video I explained that this 0.618 is the Fibonacci level, right? It's a level on our Fibonacci level, and it's a very powerful level. The market will get to it and reverse. Now let me now show you how we get to that level and how we actually integrate it on our chart. So click on this F plus. Now I already have my Fibonacci. Okay, right, so my profit scaling. Now the 0.6182 level is actually our 62 point, right? 62 point. Now let me show you right from the settings. Right, is our 62 point level. Right, click on this edit, then level. This is it. You see this 2.1 level. This is our 62% level, right? So this is, I told you that in our Fibonacci, in our envelope strategy, we'll have this level on our It's a very powerful level. The market will get to it, and they will always reverse anytime they get to this level. So that was how we integrate our Fibonacci level on our envelope strategy, just to get more confirmation, right? So that we don't bombard our charts with it, right? You can actually see, right? Let me just draw an horizontal line on that 62% level, so that we'll remove we'll remove it. 62% level, right? So here we go. So I can conveniently remove my Let me just make the level white down, right? So I can, so let's just add, so you can actually see what we have, right? So this is what we have. So at our 62 level, this is what we have, right? Okay, let me make it more bold a little bit. So once we are done, you click on done. So this is our 62% level. At above our 62% level, this is what we'll have, right? This is what we'll have here. This is after this long spike, right? We just have a little bit of it, right? And then we come down to this level and we have our buy. You might not even wait for the confirmation, which is a crossover on our main chart. Just the level alone, you are good to go, right? So that is the confirmation. I was telling you now, look at in our what on our envelope strategy, look at we have this on our envelope strategy, we have this 60%. See 0.618. This 0.618. This is the pros and cons. This deviation that is actually integrating the Fibonacci. You actually need to make a deep dive video on how you can use the Fibonacci tools. Comment in the comment section that you need the Fibonacci video. Once I get 50 to 700 or 50 to 70 comments, I'm going to do a deep dive video on how you can use the Fibonacci tools effectively and trade with it. As a matter of fact, you can trade with Fibonacci tools alone, but you need to have your market structure. Your market structure is king, right? But unlike this, just a little bit of your market structure and a top-down analysis, you are good to go. So you click on what? You click on done. You click on what? You click on done. Right. So that is it. That is it. Right. So that is what we're actually using to get our confirmation. That is what we are using to get our confirmation, right? So once we have this consolidation like this, you wait for a breakout of it. This is our range, right? That was what we mark out with our rectangle. So you wait for a breakout of it, and then a reverse back to it, to the 60% retracement of that, and then you take your buy. So while you are waiting for the confirmation, you will tend to have this, right? You tend to have this. By then, your lower band of the envelope will be at this must be at this 20 level or at this 10 level, and it can be in between. So once you have it at that area, now then the RSI, now the moving average that we have, which is a moving average 7, they must give you if something of the kind of W. Since we're actually taking a buy, but we are scalping, it must give you a kind of W, right? It must give you a kind of W. So once you give you a W like this, you take, and mind you, when you're taking about the W now, you don't take the first leg of the W. Take the second leg. If you take the first leg, this is the area you tend to make mistake, and then you blow your account. You always take the first leg. Taking the first leg is what causes people. Now if you take the first leg, right, you never can tell where the first leg will stop, where this retracement of the second leg will come. So by the time they give you a more longer second leg of the W, now this you can't withstand this retracement here. So wait for the first leg and take the second leg. After you've taken the second leg, by taking the second leg, they are done with retracement. Then your stop loss can be below the low of the second leg. This is what you people do, and then you tend not to blow your account because you don't wait for a full confirmation. So you take look at it. This is the first leg. You can actually see. Look at now. Right, this was the first leg. Right, this was the first leg, and then you have the second leg here. Look at the second leg, right? Look at the second leg, and you're good to go. But many of you will just come and enter here. By the time you see this, they come and enter here, and they take you out with this spike, right? They take you out. So you wait for your confirmation. I have your W form on your on your envelope, on your RSI and envelope, and it has to be at 20 level, right? It has to be at 20 level. So that's the first confirmation. This is another look at. I see we have another example here. Right, we have another example here. After the consolidation, wait for them to retrace back to the 62% retracement, and then you go for it. Right? You go for it. This is another example. Can see. Right. So part of the variation you get that you might not really get a consolidation that will be so massive like the other one, but just wait for a massive spike. Use to a massive spike, and then it should push down price to the 60% retracement. You have the crossover of the two moving average, and then your W forming at your envelope strategy. You can see it below our 20 level is around 1510 level, and then you carry on. You put your trigger and what you take as much as possible, as much as possible. And this is another example here. Can you see this is another example? This is another example, right? You can see another consolidation here. I see the consolidation. Do you see how it reacts, right? So this is crash. So let me just look for crash. This is crash 1000, and then let's do for crash 500. I don't want the video to be too long, so let's do for crash 500. Meanwhile, if you are yet to subscribe to my YouTube channel, please do it, click on that subscribe button and turn on the bell notification. So for the timing now, we only use 5 minute time frame and 1 minute time frame, but I would advise you use 5 minute time so that you can actually stay long in the market and it can actually filter your false signal for you. So this is crash 300, this is crash 300, this is crash 300, and here we go. You can actually see we did have, you see the consolidation, do you see how it plays out, right? So you need to wait for consolidation. That's the first confirmation. Consolidation, then after the consolidation, let them break out and then reverse back. Then you take the reverse back. The consolidation will always be your first leg of your W. So once they give you they break out and then give you a long spike downward and take it up, that will give you the second leg of your your W. So guys, do well to backtest this strategy very well. Comment in the comment section if you have any problem using it or you need anything to talk about. Comment in the comment section. And meanwhile, if you're here to subscribe to my YouTube channel, hit on that subscribe button and turn on the bell notification so that you're still updated each time I'm dropping a new comment. So guys, thank you very much. I really appreciate you. See you guys.